Hello, this is Compound Interest Stock Guy. In this video, we are going to be talking about dividend growth investing. If you're new to the channel, don't be shy. Hit the thumbs up, subscribe. I talk about commodities, I talk about cannabis, and I'm trying to get more into tune with, just get down to the nitty gritty, the basics about investing to newer investors and appeal to a broader audience. I also want to disclose I'm not a financial advisor. This is just for entertainment, information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and you like the investments you are pursuing. Okay, so what I'd like to share with people is that there's some very wealthy people in the world, and what do they do to sustain their wealth? They buy companies that give a dividend out. And when the dividend comes out, they can take that money and they can go on a holiday, they can buy something, or they could buy some other asset, they could do all types of things, or they can reinvest. So say you own Microsoft and you got 100,000 shares, $100,000 worth of Microsoft shares, and it's giving you, say, $2,000 a year. Every time you get those dividends, you can throw it back into buying those shares of Microsoft. So you own more shares of Microsoft, and you're putting more money into the investment world. Or you could put that money into your lifestyle, or you could put it into saving up for buying a mortgage, or whatever the case. There's all different types of reasons why you'd want to use the dividend money. But what is dividend investing? It is investing into companies that have a dividend. There's a yield. There is some dividends that they'll offer you a monthly. It's very rare for it to offer you a monthly dividend, but there is some. There's also dividends that they'll pay you out every quarter, every 3 months. There's also some that are every 4 or 5 or 6 months, and then there's some that are just once a year. So what is a dividend yield? A dividend yield is the percentage of the amount of value you have in your stock portfolio in that dividend stock. So say you have $10,000 and there's a 3% yield. That means that you're going to get paid $300 on a yearly basis as long as that dividend yield stays the same. Now, there's dividend pay, they'll have it'll give you that information, and then it'll say how much it is every year. So there's all this information when you're looking up at stocks, but the dividend yield is I think the most important one that you got to look at. Another thing is what a lot of people look into for dividend investing is they get very excited about a company that has a 10 or a 15% dividend, but they seem to forget that some of these stocks, they will actually give you a big time dividend just so they can entice you to stay with them long term and keep your money in that company. But eventually they'll pump and dump it or something like that, and they'll take their money and they'll run, or they just won't have enough money to pay the dividends, or all different types of reasons for that. Is not a very sound investment idea to focus on dividends that have the highest yield. The biggest reason why is they can just run out of cash and they won't going to focus on their business, and it can just put them in a bad spot. So there's always value traps with the dividend investment world, but the more you research and you find very great companies, the better off you're going to do in a dividend portfolio. So there's some very good dividend investors, and they'll have maybe 10 or 5 or 15 companies in their dividend portfolio. So essentially they'll all gonna have different yields. They're gonna come out at different times. Some people have it so set up that they're making sure that they have a paycheck every month from dividends. So that's very cool for them. something that I'd love to work on, but I do have different goals for my future with the real estate flipping and stuff like that. So that's not really a primal concern to be serious, super serious on a dividend, but I wouldn't mind starting it and putting like $10,000-$20,000 in the next couple of years or even more, just depending how investments do, and build a serious dividend portfolio. So with the dividend portfolio, you can have stocks that maybe be anywhere from 1% or even like 0.6% to 2% to 3% to 4% to 5% to 6%. Now, when you get a little bit higher in the 6%, you got to ensure that the company has a very sound business and they're not going to have problems later on. So, see, the thing is, okay, it's all great. Okay, you're getting a 15% dividend, but you buy that stock maybe when it's $5 and the company, you don't look at it because you think, oh, you're just going to get all this free money, and then the stock's worth $1. So you can put stop losses on things. I was actually practicing, like I've done stop losses before, but I was putting on stop losses today. In companies, they will not let you do stop losses for CSE companies, but they do let you do it for TSXV as well as TSX and NASDAQ and NYSE stocks. So that is a tool that you can use as well. In a different video, I may go into further, but we're talking about dividends. So you could do that with a dividend stock. So if you're so concerned, you could buy it at $5. You could put a stop limit at $4.50, so you're willing to lose about 10-12% or whatever, and then, you know, maybe it goes to $10 or $15. You can put your stop limit even like $1 below that, but that is the thing that you could do. So, but I don't really encourage that behavior. If you want to invest in a dividend portfolio, I think you have to do things the right way. You need to invest into solid, sound companies such as Coca-Cola, like Fortis, ExxonMobil. There's a whole list. Even Vail. There's a host. Freeport McMoRan. There's a list. I don't have the list with me, but you can do RBC, BMO, Scott's Miracle-Gro. The list goes on, but there's only some solid companies that if I wanted to have a dividend portfolio that I would focus on. I do have a watch list for that, and I may talk about that in the future. I think I already did in one of my videos, but the audio wasn't very good. But that is the basis of things as far as a dividend portfolio. So that's you want to invest in really solid companies like you know, people say like IIPR is as a dividend. Yes, they do have a dividend. I'm not convinced that IIPR is a great stock in 2020. I just don't understand the business enough to get it. I mean, I don't know. I have my doubts. I know it's crazy. I know they only have 10 million shares out and all that, but I just don't understand how they can be able to run all these properties. Like, where did all this money come from and all this stuff, and how much debt do they have? I would need to research them further, but for cannabis stock, they're probably one of your best bets if you want to just do that, as well as the HMMJ, which is the cannabis ETF. There's the Scott's Miracle-Gro, as well as Altria. You can do British American Tobacco. There's a host of but basically, if you were to do one, you'd want to have like 5 to 15 different stocks, and I mean, you could just do 2, I guess, or 1 if you really felt like it, but putting all your eggs in one basket isn't always the safest or best idea. And you know, then you can get money at different times of the year as well when you have a few different stocks, so that's a cool feature. That is basically the basis of what dividend investing is. Dividend growth investing with compound interest stock guide, giving you the raw solid info, giving it to you raw. Compound interest stock guide. Shaka. Peace. I hope you found a lot of value in this very informative video about dividend growth investing. And you know, if you want any more to talk about that, leave it in the comments down below. Make sure you give me a thumbs up. Helps me push me to make more videos, and then more people can see my videos. So then more people can find value and they can learn more and make the community even stronger. Anyways, peace. I'm out.